Most people lose money on rentals before they even buy them because they don't know how to analyze the numbers correctly. So today, I'm going to walk you through the step-by-step process on how to analyze a rental property in 2025. By the end of this video, you'll know exactly how to calculate cash flow, expenses, and returns, so you'll never wonder, is this a good deal ever again? Welcome to the channel that flips the script on real estate, money, and mindset. I'm Rob Ragnall, and I created Redefine You to do exactly that. Redefine the way you invest in real estate. No fluff, no theories, no trends, just real, raw strategy. So before you waste another dollar on another mastermind or course, there's a link to my free school community in the description below, which includes the calculators, the trainings, the deal templates that we use in our exact business. So let's dive in. Here's the problem. Most people buy rentals on emotion. They say things like, it's a nice neighborhood, or it feels like a good deal. Wrong. Real estate is math, not emotion. And in 2025, with higher interest rates, rising insurance costs, and unpredictable taxes, the margin for error is razor thin. So let's break it down step by step. Start with gross rental income. How do you get it? Don't guess. Don't trust Zillow rent estimates. You need rental comps from your agent or property manager. You can use marketplaces like Rentometer for quick checks, and always underwrite conservatively. If comps show 1,800, I'm running my numbers at 1,650. Better to be pleasantly surprised than painfully wrong. Next, expenses. This is where most beginners fail. They only look at mortgage and property taxes. Wrong again. Here's what you need to budget for: property taxes, insurance, repairs and maintenance, capital expenditures, such as roofs, HVACs, and big ticket items, vacancy, use 5 to 8% depending on the market, property management, 8 to 10% if you're not going to manage it yourself. And the best rule of thumb, if you're not sure, just use the 50% rule. Assume half your rent will disappear into expenses before debt service. Now, calculate net operating income, known as NOI. That's income minus expenses. Then subtract your mortgage payment, principal and interest. And in this example, where your rent is $1,800 a month, your expenses can be $800 a month, your mortgage $1,000 a month, and your cash flow would be zero. Here's an example. If rent is $1,800 a month and your expenses are $800 a month and your mortgage is $1,000 a month, that means your cash flow is zero. That's break even, not good enough. You need positive cash flow to make sure you're not buying a headache. A safe target is $200 to $400 cash flow per door as a minimum. Cash flow is just one metric. Let's talk returns. Cash on cash return. That's annual cash flow divided by the cash invested. If you put in $20,000 and earn $3,000 a year, that's a 15% return. That's a strong cap rate. Now cap rate. NOI divided by your purchase price. Good for comparing properties or markets side by side. In 2025, what I want to see is at least a 10% cash on cash return to even consider it. Now, here's where I separate myself from 99% of the investors. I don't just analyze properties to see if they cash flow. I run them through my POP method matrix. Profit on purchase. This means I make money on day one by buying under market value. For example, if a property has a market value of $200,000, I buy it for $150,000. The lender will finance 80% of the value, which is $160,000. That means I walk away from closing with $10,000 in my pocket. That's how you can guarantee your risk is low and your wealth snowballs fast. Now here's what you need to know. Numbers don't lie, people do. Sellers will often inflate rents, agents will downplay the expenses, and lenders will overpromise. Your job is to know the math so that no one can trick you into a bad deal. That's how the true professionals operate. So that's the exact 5-step system to analyze any rental property in 2025. Income, expenses, cash flow, returns, and using the POP check. If you want the exact calculators, cheat sheets, and even real deal breakdowns, I've loaded them all into my free school community, which you can grab the link in the description below. And listen, don't buy rentals with your gut. Buy them with the numbers. That's how real estate pays you. Hit subscribe, hit like, and drop me a comment if you want me to run a live deal analysis in a future video, and I'll see you on the next one.